Got me some Chick-Fil-A sauces. Yeah, how's that yesterday? Of course, they don't just Lancaster Colony being the company, LANC, which is the buy signal that we hit in real-time alerts. That one, can you just give people a quick, 30-second recap on what they do and why you like it?
A big part of their business, the fastest growing part of their business, is that they make the sauces for nearly half of Howard's QSR companies. The most important one being Chick-Fil-A. So Chick-fil-A, as you know, is a private company that they'll never be public. There's no way for us to participate in that growth except for Lancaster Colony, because they make the sauces for the restaurant and also now a big growing business like what you just picked up at food retail. So you can sort of recreate your own Chick-fil-A experience, especially on Sundays, right? You can just use the sauces and get as close as possible. But they're also doing other sauces. This quarter, they're launching both Subway sandwich sauces, which I didn't know was a thing, and then Texas Roadhouse sauces. So, this is a growing thing, the branding of restaurants taking it to the food at home channel, but they also have some other businesses. But the one important thing that I just want to remind people about for the Chick-fil-A perspective is Chick-fil-A is still growing units about low single digits, right? And, we don't know exactly what they comp. We hear sometimes things, but they're comping. I think Howard would probably have the best estimate, but I think Howard would say low single to mid single digits. So you have that, and now it's on a very large base, right? It's the number 3 QSR in the country, which with no international exposure. So that on that absolute dollar base, growing, mid single digits, high single digits, that's a big growth number, and that it accounts for nearly half of all Lancaster Colony's sales growth. So just with that Chick-fil-A growth, you're hitting almost half of their targeted growth, and they just added a new factory to expand that the sauce for the retail market. They just expanded that, so they have that, and they also have a big margin catch up because they were just absolutely crunched in the last couple of years from the input cost perspective. So they're catching up on pricing. So I think you have very good visibility both from Chick-fil-A and from the margin catch up perspective. So for the next couple of years, I think it's very visible.
I love the asymmetry of having these positions. I mean, you can be long, and hopefully you listened to me yesterday on the macro show because we had layup buys in NVIDIA, Amazon, Meta. We explained them all. If you missed the show, I can't help any more than just even when I'm on quote unquote vacation with my son, I'm working. You got to grind. You just got to grind. But the asymmetry to having like LANC in your portfolio alongside names like that, I mean, that's why we do this. That's how we do this. Okay.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.